welcome back to another Tomless version of the Fit Finance sessions. As you can see, it's just Henry and I with you today. This week we've got some new news for you, which is quite interesting, quite market related. But anybody, I suppose, who's turned on the TV in the last 24 hours would have seen, of course, coronavirus has reared its head, or is starting to rear its head across Europe and particularly the UK, which of course has stunned the market into a little bit of a fear-based position, and things have started to take a little bit of a downturn. We've been chatting about this now for a good weeks, really, months of this sort of thing as to how things will move forward with regards to the market having moved sideways for a large period of time, whether or not that will continue. That's the main issue of what's gone on. I've got a couple of other bits and pieces to mention, but Henry, do you want to chuck your 2 cents in with what you wanted to mention?
Yeah, why not? That's what we're here for. It's been interesting, hasn't it? So coronavirus looks like it's going to go up a little. The cases are going up a little bit. It's interesting. The cases are obviously going up, but that's because testing capacity has gone up from whatever it was, 4,000 back in March to 250,000 today. So it would be somewhat unusual if the cases didn't go up. But I suspect it's also, although actually we've had a very nice last 3 weeks in terms of weather, and I think an awful lot of the original drive or the original theories were that caseloads go up when we all spend a lot of time inside. So I'm not convinced that that's happened, albeit I'm sure that lots of people mixing and going out with the help out to eat out, help out. That thing when we could go to restaurants in August on the cheap has probably pushed incident cases up a little bit, albeit I suspect mainly in with the youngsters. And living in Oxford, we had a whole load of the naughty Oxford Brookes students all having a big party last weekend, which made it onto the news. And undoubtedly, you only need one person there with the virus, and it'll knock it around 150 people all at once. So it'll be interesting. And I see why the government finds itself in a tricky place, because I think inevitably they will have to be seen to form some sort of a lockdown just to stem the progression of this virus around people, which is, I think, is right, but it's a tricky path they have to navigate. One, keeping people safe, or keeping those that are significantly at risk safe, certainly, and also not completely choking off the economy, which from right back in January it was in a really great place. Now, of course, it's in a really nervous place, and it doesn't quite know where it's going or what's going to happen, which I think you see in the markets just this morning, which have fallen best part of 3.5%, which is I think it's ridden on a couple of things. One is that some of the banking stories, which I think you're going to talk about in a sec, which has certainly helped drive it down. But the other is this fear that pubs are going to get shut and people aren't going to be able to go away at half term, which certainly bothers me, because very well, Tim, I love a drink, and I'm also planning to go away in half term. So it is a worry.
It is interesting though, isn't it? Because as you say, the cases have gone up, but actually if you look at the deaths, I'm actually trying to find it on BBC's website this morning, but I can't for whatever reason. The cases have started to obviously clearly come back up, but actually the deaths are sort of in single digits. So you've got to ask, yes, cases are around, but actually if it's not as lethal anymore, or at least now than it has been, or whatever, then surely that's got to be taken into account as to whether or not a lockdown is necessary or justified or not. But we'll have to wait and see, I guess. But I think that's really interesting.
Or you have a 2-tier lockdown, which I don't think is so palatable, but those that are at risk or over, name an age, 80, 75, 70, 65, isolate to a greater degree than those who are, 40 and below, which leaves me in an awkward position somewhere in the middle of that. But let's not go on about my age.
Yeah. Well, no, there's a couple of interesting parts to it. I mean, I went on their site, actually, BBC's. Well, no, sorry, it wasn't BBC's. I can't remember where it was. I think it was NHS now, actually, where, interestingly, if you've been diagnosed with COVID-19 and then pass away 1 month post your diagnosis, no matter what you die of, it's classed, it goes down as a COVID-19 death. And actually, I think over the weekend I saw a stat where the amount of people that passed away since March without any underlying conditions at all is somewhere in the region of 320. Don't quote me on that, but around 300. So since March. So, I mean, obviously, luckily I don't have any underlying conditions or anything like that, so it's easy for me to sit here and say that sort of thing. But, I suppose arguably the vast majority of the population doesn't, perhaps. So, for us to sit here, or for the government to sit there and say it's such a widespread issue, that's, there's a particular view to have, to be a little bit more conservative about it.
Well, yeah. The other thing that I think is quite interesting is the uptake of flu vaccine has been much greater this year than normally. Incidence of flu in the southern hemisphere, so you know where the southern hemisphere is, I don't need to describe that. Over their winter period has been significantly lower. So it'll be interesting to see what happens with the flu season in the northern hemisphere, because I suspect that a few things will come to play. One, of course, the vulnerable, an awful lot of that vulnerable population have passed away with COVID, and the part of the population that you would expect to be hit by the flu when it comes around and to be very vulnerable to it. Secondly, because we've got these social distancing measures in place now, and everyone's been told how to wash their hands and sing happy birthday twice and whatever else, then actually I just wonder whether or not the transmission of flu this winter, this autumn, this winter, will be as prevalent as it's been in the past. It'll be really interesting to see how they always talk about this excess death rate. Actually, whether or not the excess death rate this coming winter may be lower than it has been in the past, just because of these additional measures that people are taking to avoid coronavirus.
Yeah, well, I think it'd be a reasonable expectation for it to be, wouldn't it? I guess so. As you say, more than how life is so different. Well, this winter is going to be so different than all the other ones.
Yeah, no, I think so. It'll be really interesting. Anyway, we'll find out.
Yeah,
we'll report on it next April when the numbers are out. I bet no one can barely hold your breath at that time. Very exciting. Hey, look, the other thing I was going to talk about, and it came to mind actually because I've just advised the client to take out his full quota of, he's selling a house, his full quota of premium bond account. And last week, Bank of England minutes came out from their monthly meeting about what they should do with interest rates. And interestingly, they've left the door open, I think is the journalistic phrase, for further reductions to interest rates. The interest rates at the moment are 0.1%. So when they start talking about reducing them further, what they're really talking about is turning them negative, which is something we've never seen in the UK. It's commonplace in Japan for the last 20 years, and certainly in the European Union for the last 5 or 6 years, which comes with it all sorts of different problems. But one of the problems or opportunities, probably more problems than opportunities, I would say. But one of certainly the problems that I noticed was that National Savings and Investments have repriced their products. So NS&I are the government bank essentially, and you can invest, in inverted commas, into NS&I through the purchase of premium bonds, commonly, which is well known, but also they have income bonds and a direct save ISA and stuff like that. And the rates on their direct ISA and income bonds are being pushed down from November to 0.1%, which is pretty much nothing at all. And even on their premium bonds where they typically make, I think it's 3.2 million prizes a year. They're going to reduce the prizes to something like 2.2 million. So it's about a third of the prizes are going to be lopped off. And I think the current rate of return, the average prize fund, is 1.4% a year. So I dare say that when you reduce the number of prizes being paid and take into account the additional contributions that have been made to premium bonds over the year, which has been massive, that actually the rate of return will probably halve, I should think, down to sort of the mid 1%. Sorry, the mid 0%, so 0.5% to 0.75%. Which is a darn shame, because they're a cracking place to hold a little bit of money. Certainly your sort of emergency fund with that potential upside of winning £1 million, which sadly none of my clients have won yet, but I'm sure it's going to happen soon.
Every premium bond owner ever. Yeah. No, but of course, yeah. I mean, that's less of a problem, I guess, than it has been historically, because of inflation obviously is so low compared to where it was. So the gap between obviously interest rates and inflation is still relatively healthy. I would say, I don't know what the last inflation figure is. I believe it's 0.9. For some reason that figure's come to my head. In the UK at least. So you're sort of on par with one another. But of course, the idea is to be growing money rather than just tread water, obviously. Yeah, more fun to come then, by the sounds of things.
Fun to come.
Always. The other thing which I wanted to mention, of course, which made the headlines sort of everywhere really this morning, is this, well, mainly HSBC, but the banking, a couple of naughty bankers out there making the headlines with this release or leak of the FinCEN documents, which essentially is sort of more of the same of that old ages of bankers letting fraudsters move their money, their millions around, which also sounds like, well, of course that happens, Tim, but not quite to this degree. I believe it's over $1 trillion, which over the course of 20 years, I think, has been moved around. So culprits, namely Standard Chartered, Barclays, HSBC, Standard Chartered, Deutsche Bank, of course.
What did you say, of course?
But they're because they're always, it's always like HSBC and Deutsche Bank. I think there was even a Netflix episode done on HSBC. I think it's called Dirty Money. If anyone, don't know if you've seen it. Have you seen it?
I haven't. No.
It's about their link to Mexican cartels. How they're companions, as it were, or compadres, perhaps. So yeah, I think that's probably a large driver in the sinking of the FTSE today. That in obviously combination with the fear of COVID, but yeah, more of the same really. Not too much to discuss on that, to be honest. Actually, and like I said, it's really just more of a statement, isn't it? It's not just more of the same. I think they've come back to the reporting of it or the leaking of it, and their comments have just been, great, but this is sort of, you're just reporting on something which has happened in the past, and we've invested hundreds of millions into our compliance systems, etc. So you can't slap my hand type of thing. It's we've turned it around, Joe, type of thing. But yeah, interesting point.
Yeah, quite. It'll be. It's one of these things that that banks just lose trust with their clients, and it's these sort of stories that make them lose their trust, and that make them lose trust. And actually, sort of slightly linked into what I said earlier, there's stories in the papers over the weekend about banks reducing or removing the idea of a free current account because it no longer becomes affordable with interest rates at the level they're at. And you just wonder, you hear these stories in the press of banks shying away from their money laundering requirements or their money laundering obligations, and you do lose trust in them. And then actually, when your bank comes to you the next time around and says, we're going to charge you now £5 a month just so you can hold your money with us, it does sort of bring into focus actually what is the point of a bank, and are they doing it in the right way, and should there be a much greater overhaul of the banking system, or perhaps, you know, we end up going down a much more digital route, as perhaps we're seeing already. It's a much larger question, I think, than you were driving at. But what does, you know, what does banking look in 20 years' time? What does banking look like in 20 years' time? And I suspect significantly different to the industry that we see today.
No, for sure. Arguably, I would say I think you're right. I think more digitally would be the answer. I mean, I think that's what the BOJ and the Bank of America even have said. The Fed have said, you know, a digital dollar is potential. You know, there's potential. I think China said something along those lines as well. So there's conversations about it. But yeah, of course. I mean, for the majority of the people out there, you know, having a bank account is sort of twofold, isn't it? One, convenience rather than having all your cash or whatever physically in the house. Two, obviously, security off the back of that, not having all the cash in the house. And three, in the hope that you actually earn a little bit of, you know, a couple of quid off the back of it. Whereas if there's no interest rates and actually got to pay for the benefit of having that admin and security, then, you know, will we see a little bit of a rise in cash holders? People thinking, oh, do you know what, sod it, I'll just, sorry, excuse my French, you know, just pull my money out and have it in the house, under the mattress. We'll go back to old times. I don't think it would be quite as severe as that, but you know, some people may have. Sorry.
Bitcoin.
Yeah, or Bitcoin. But well, they definitely won't like that. But they'll spin their own version of it, won't they?
Yeah.
Excellent. Okay. Well, have you got anything else you wanted to mention, or I think
not today, Tim. You have wiped me out of my weekend reading.
Excellent. Perfect. Okay. Well, thanks very much for listening. And of course, if you've got any views, comments, anything like that, of course, throw them at us. Do your worst, and we'll be more happy to engage. Thanks very much.